Hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. The first thing we're looking at here is a chart of the market. This is going to be the mini S&P 500 futures contract. Front month in nature. Yes, 357%. We'll get to that in a second. Front month in nature, looking at a last print of 1206.50. So we're going to go ahead and seek to find our actual... There we go. So we're looking at a chart of the intraday market, 1206.75, getting a little bit of a bounce back. We've had a pretty impressive sell-off here late in the day on Wednesday. And it's kind of interesting. As you can see, we are full all-out bearish. Generally, actually, we're pretty much, I'm looking right now, we're about short about 9 contracts in the matte black. So this little bounce here is a bit irritating, to say the least. Nevertheless, we do seek to remain disciplined and expect the market to move lower off this 1208 level. Unfortunately, we're probably not going to have a free informational day trade, because it's pretty late in the afternoon. It's actually in the final hour of trade, which is kind of why you're getting the short covering bounce into the close. But as you can see, the market's gone from essentially 1223 or so all the way down, well, to a low of 1201.50. So it's a pretty impressive 20-point sell-off that we've seen in the market. We're going to get to the daily analysis in a second as to why this sell-off has occurred in the market. We actually did see some pretty bearish indications. Bearish is, of course, of our intraday dynamics, our proprietary indicators we have that we use to gauge the market. As you can see, we had kind of a flat open. The market really didn't have any direction, tried to bounce off the trend, had a pretty impressive little bounce off the trend, but it really wasn't going anywhere, because if you look all at yesterday, it was beautifully bullish. Yesterday, we can scroll out, look at this amazing buying surge that we had late in the day. That was a pretty impressive move and pretty beneficial. But as you can see yesterday, of course, Tuesday was actually a turnaround Tuesday session at TAT, because as you can see on Monday, it was actually full all-out bearish. Bearish, 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 and of course we get a close near the lows of the day. This, of course, is Wednesday. Tuesday, a turnaround Tuesday, and this was Monday's session, full all-out bearish, and of course we get a trail lower to the downside again. Tuesday, full all-out bullish, where our indications, green, of course, means bull, and of course we get a close, pretty much an impressive blast to the upside, and of course we're getting a sell-off today. Well, the reason being, of course, as you can see, we're full all-out bearish, so any break below this trend, this was when the shorts, the bears realized, uh-oh, we're below the trend. It looks like a pretty bearish scenario, and we're going to be looking to sell, and that's, of course, what they've done. They're getting a little bit of a bounce back as they cover the shorts again, as mentioned. But we're going to go ahead and swing over to look at the daily chart, which is pretty telling. Again, we're getting a beautiful, some beautiful formations in the daily chart. Should be right here. There we go. So that's a daily chart of the mini S&P 500 futures contract. That's the 24-hour contract, and as you can see, now we actually went unofficially bullish on the 4th day of October. The close was 11/13/50. We told all of our clients and those interested, anyone that would listen, that this was the buying opportunity that we had been waiting for quite some time. We definitely wanted to retest the lows, if not penetrate them. All these bounces that we saw back here definitely weren't likely to merit much, and of course that's what we had, continued sell-off. But this was the buying opportunity, particularly given the first month of October, that we had been looking for. And we, although we have to remain disciplined, and our official market timing is actually still bearish, given that 1220 to 1222 target. That was our target on the upside. Once we reached that target, we told everyone this is the place to get out of the market. We have to maintain our official bearish bias. We've had an unofficial bullish bias to all of our clients since essentially almost 1100, so about 100 points or so to the bullish side as we expected a bounce. So far we've gotten that bounce, and this is what's so interesting. Generally speaking, these two measures of trend, the blue and the red, are what we use to gauge the market. So essentially, had this green line not been here, we would definitely be bullish right here above 1186 or so. So around 11, we'll even call it 1200, definitely be bullish. But as you can see, the market is finding resistance at that 1220 level. That, of course, was our target. The market's finding resistance there. It's been 3 days, so we have to, unfortunately, maintain our bearish bias actually above these two measures of trend, particularly confluence. That's just very interesting. You don't usually see that, but in this case, we have to wait for confirmation, unfortunately, and can't go to the bullish side on an official basis yet, and have to actually remain officially bearish, and that's actually where we are, officially bearish since moving. So I think around 1300 or so, we'd have to look at that. Those of you following these videos every week certainly know when we went officially bearish. It's actually in your email. So that's kind of a look at the market. That's very interesting, and that's why we're getting these nice moves up, nice moves down, because the bears are definitely going to defend this last bastion of resistance here around 1220, 1225, and the bulls are definitely going to defend their last bastion of support, or what they've worked so hard to gain, right around the 1185 level to 1190. So that's why we're getting these. So essentially, again, even though we've had a meteoric rise in the market, we could have another extreme move. We've had quite a few of them, and they've been particularly profitable for our firm and for our clients. We'll look at that in a second. As you saw, MSAUDT, the portfolio leading portfolio. Is that right? Portfolio leading portfolio is up 357%. Almost, we're now closing in on 400% for that portfolio. Just continues to outperform. I believe the MSAUDT trades 6 day trading systems, and but essentially, the market is painting itself into a corner here. If we have the break, it will be impressive. Could be to the upside, could be to the downside. We're going to let price be the final arbiter. A clean break certainly would suggest a quick move to 1350. A clean breakdown here. Obviously, we're probably going to go toward. We're not going to retest these lows, but we'll definitely get to the 1100 to 1150 band. Print a higher low, and that'll be another good buying opportunity to get involved. But nevertheless, of course, we did mention couple of weeks ago, one of the best multi-year buying opportunities that we've seen. For now, though, we do remain officially bearish on the market. We're actually looking at the futures. Here's the cash market. As you can see, we had that triangle, tried to break it down, retested it, came back up, broke above it, and we're now walking along the former trend, as you can see right there. So not only do we have the measures of trend, but we actually have the actual trend that the market's finding support, and of course that's why you're getting this short covering rally aforementioned as we head into the close. But it's anyone's guess. We still have a lot of technical damage to work through on the market, so we'll again let price be the final arbiter from a discretionary perspective in our official market timing. But having said that, we're a systematic firm, and we provide full automation, auto trading, and for our portfolio. So we're going to actually go ahead and look at those. Not much going on in these systems. These are platinum systems that we've just offered to the public for the first time, and as you can see, breaking to new highs, green there, breaking to new highs, R30A, breaking to new highs. Look at that, $258 a trade, $4,500 maximum drawdown, $90,000 for the R30A. Just absolutely beautiful. Even better, $300 average trade net profit, $3,300 drawdown, $50,000 over the last 10 years. That's what's particularly impressive. CBR $90,000, $7,800, $200 average trade net profit. EVM CM $145,000. The average trade net profit goes down a little bit, but of course we deduct $20 for slippage and commissions from every round turn. The maximum drawdown there a little bit higher, but as you can see, a beautiful equity curve for these models. Again, green, green, green. These are our platinum models. ISRD Here we go. This is kind of interesting. A beautiful short setup. This is going back over 10 years to the 90s, and as you can see right there, $229 average trade net profit, $11,000 drawdown, $90,000 over that term. So as you can see, these are all part of beautiful short setup today. By the way, shorted on the open 1218.25. Of course, we're now around 1205. Have hit 1200, and that of course is a swing model. EVR3. There you have right there. $340 average trade net profit, $7,500 maximum drawdown. These, of course, are our platinum models. Platinum, they go for the platinum. Actually, the ESM 30 XX. Catching a couple of these nice longs. The R30s weren't able to catch them, but the ESM 30 XX actually did catch beautiful. So that's about 30 points or so. Take that back. That's about $3,000 for those three contracts. So not bad. As you can see, breaking out to new highs for the ESM 30 XX. We're going to go ahead and minimize that. And I think we're done looking there. Let's see anything else we want to look at. This is kind of interesting. So we're looking at our EVO. Here's our traditional EVO. Trading the Russell contract. Not really active. Bam. Trade the active version. Look at all those trades pop up. Winner, 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 winner. Let's see. You lose out on 2 losers and you gain 4 winners, it looks like. So definitely that's why we call it the active model. We're going to go ahead and pull that up. Strategy. There's the equity curve for that. $40,000, $6,000 maximum drawdown. That's the Evo TF active. $30,000, $5,000 drawdown. $120 average trade net profit for that. Only 84 for the active. We're looking at $113 for the Evo ES, which is the Evo Day Trader 1.01 lot. Evo EM. 62,000 with the $156 average trade net profit. Beautiful. There you go, right there. There you go, right there. Oh, this is absolutely insane. EMD system 1.0, nasty maximum drawdown. Definitely part of a diversified portfolio. Of course, we've traded this in our Matt Black portfolio, $100,000 portfolio for quite some time. But look at this. This system's actually been live since probably 05 or 06, and this data needs to be extended. But look at the trades this puppy has had lately. Absolutely insane. So we're going to go ahead and look up. Wait, Evo EM. We definitely need to look at those equity curves. Look at that beautiful Evo EM equity curve. Now that's absolutely insane. But the EMD System 1.0, absolutely insane to the upside, as you can see. We're going to have to edit that, I think. So we're going to have to edit that out. Okay, so let's pick this video up here. So we're having to look. We're definitely going to have to look at the Evo EM right here. Beautiful equity curve for the Evo EM, as you can see, breaking out to new highs. So this is definitely one of our best Evo models right here, as you can see. Moving over to the EMD system 1.0, absolutely insane. We traded this system probably for about 6 years or so, and as you can see, look at that. Goes from 41,000. That's the market close, folks. 41,000 to 80, almost $40,000. It's made. The trades have been absolutely insane. So we're actually going to minimize that, and I believe we're going to need to look at how our portfolios are doing. There's the MSA UDT up $3,880 on Monday. Today's Wednesday. Today the portfolio, I don't have a snapshot. We're about $1,000 gain on the Matt Black. So there you have kind of a flat to mixed day, but as you can see, as mentioned, the MSA UDT now up 357% for the MAPDT actually has come along and has now been the next one. It's overtaken the Delta DTS 15K model. We actually have a 10K model. MAPDT 20K up over 300% now after a 10% gain yesterday. This was as of Monday the 17th. But as you can see, $3,880 was a gain for the MSA Ultimate DT, MSA UDT. And again, the MSA UDT was part of the MSA line, the ultimate line, which about a couple of years ago we just went through and took the best models that were performing, handling the markets well, and that of course is the MSA UDT. And as you can see, definitely the proof is in the pudding with a 350% return over the last 188 days or so. So if you're interested in getting involved in that portfolio, there's Tuesday, MSA UDT dropped $900. There's a MAPDT gain of 10%. Monday, absolutely insane gain for MAPDT, 32%. There's MSA UDT up 38%. Master and Q didn't trade. More beautiful gains last Friday, 20% for the MAPDT, which has obviously been ongoing. That's the original version, closed, but we do have version 5.0 available on the website. It's been ongoing for about 7 years or so. So I think that about covers it. If you guys have any questions or you want to get involved in these portfolios, you can do so. Just simply go to the website. You can chat with the support team live, or you can choose an email to admin@MiniAnalyst.com, and there you can do your live chat. You can go to the product, MSA UDT, $788 per quarter. You simply cannot beat that. 6 trading models, 6 trading models for the MSA UDT, just $800 for 3 months. So absolutely insane deal. If you guys have any questions, feel free to shoot us an email to admin@MiniAnalyst.com. Hope you enjoyed the video, and good trading. We'll see you next time.